Hey everybody, welcome to Tax Update for Weekly Tax Update for August 11th, 2023. As you come in onto the room, let us know that you're here and that you can hear and see me. Oh, look at the hello, Jerome, Bruce, Wendy, Susan. Hey, Susan. Karen, Deb. Hey, Glenn. Henry spoke to you today. Tim. Oh, Pat. Hello, everybody. All right, so let's kick it off. Welcome to Weekly Tax Update, August 11th, 2023, affectionately known as episode 81. This is another supersized episode in our string of oversized episodes where I just have too much information driving me insane. So welcome. Monthly lineup, we've been mentioning September and October. We're well into the real estate this month. AJ Reynolds, Kathy Morgan, myself. Come September and October, representation, both basic and advanced, collection, and examination. So we've got about 50 credits worth of material coming up. So please join us. And then November, getting the tax office ready. If you're not a monthly subscriber, please consider becoming one. Great deal of content coming up this fall. And we have a great deal of content actually every month. If you need assistance, sole practitioner, you don't have staff or support folks to help you or somebody else to bounce things off of, by all means, consider joining the Tax Practice Support Program. We meet every Friday, 1 p.m. Eastern to 2:30 p.m. Eastern, all year round. During tax season, we add 2 hours on Wednesday evenings. I'm joined weekly by Ellie Jones during tax season. We have a rotating cast: Rita Ryan, Mark Dabrowski, Susan Anderson, Jessica Smith. And we talk about everything you need from whatever your issues are, from international tax problems, regular tax problems, staffing problems, software problems. If we can help, we will. So there's still one seat left right now. By all means, consider joining. Real estate program is well underway this month, as we mentioned. A list of the webinars here. We won't read them to you, but coming up this week, we have sales, transfers, refis, like-kind exchanges, sale of business use real estate, basics of residential and commercial rentals. A busy week coming up. So look forward to seeing you. We're well into the Agostino Tax Controversy Seminar Series. So we're looking now at the September 12th program. Trial of a U.S. Tax Court Case, Practice and Procedure, Part 1. Frank's rough cut of last Tuesday's program is available right now for replay. There's 36 minutes where Frank talks about artificial intelligence and shows you live how to put queries in to get the right results. And they're using studying for the USTCP as the example. But seeing Frank's prompts and inputs is priceless. We've got the editors working on it. You're going to get a separate 36-minute cut of that available probably on YouTube. So if you're looking for that, we have it. That's right. I was wondering why that was out of order. So taxation of non-resident alien individuals is a free IRS webinar. Now, I think they did this once already this year, but it's a 2-credit program coming up August 17th, next week. It's free. 2 credits from the IRS. It's interesting that they're doing a 2-credit program. Typically, these IRS programs are 1 credit. So it may be worth tuning in to hear the IRS's opinion. We are hoping that our final submission for the annual federal tax refresher is going to be approved. I thought it would be in last week, then I thought today. Hopefully Monday we will have our final approval and you'll be able to take the exam, watch the material, take the exam, and get your annual federal season program certificate designation. The International Tax Conference kicks off October 30th, 31st, November 1st in New York City. Myself, Rita Ryan, Marina Hernandez is back this year, Ruth Matson, and I'm missing someone, but fabulous program. So please consider joining us live in New York City. IRS operations number. Now we have one interesting thing here. August 4th updates with numbers as of July 29th, but this one piece is actually didn't get updated by the IRS. The number of 1040s in process was not updated this week. So, and it's not that they had 0 returns processed, because they didn't update the date either. And I checked just before program time. The service didn't catch the error, or they're not disclosing it. 1040X returns, 1.2 million unprocessed as of July 29th. That is a drop of 70,000. Form 941X has inventory of 511,000 returns. That is up 5,000 returns. They are processing typically 40,000 returns a week. No change to ITIN information. They're still processing May 2023. And identity theft, embarrassingly, still is a 430-day average to resolve a case. So I'd like to disclose that we are occasionally using Chat GPT now to help summarize articles. Some of these longer pieces may not be worth speaking to you about, so we do a quick summary and take a look of it. Parts of this presentation are prepared with the assistance of artificial intelligence and natural language learning. Cut off there a little bit. Some information is based on curated articles and summaries generated by artificial intelligence, but reviewed by me. And I thought that this cartoon was very cute, where Chat GPT starts telling people what to do. Read a book, get out. So the reason for the cartoon is there was a Reuters article on use of Chat GPT in the workplace. Now, I know this is the hot buzz. Everybody's talking about 3 years ago, we were talking about crypto. Today, everybody's talking about Chat GPT. But people are using it, and this is a problem. I was at a seminar in San Diego a couple of weeks ago, and these folks are all saying, oh, yeah, I'm using it all the time to answer my IRS notices. And I'm like, wow, that's great. What are you using? Oh, Chat GPT 3.5, in other words, the free version. What kind of prompts are you using? Prompts? I just tell it to answer the letter. I said, oh gosh, all right. So I don't think some of those responses are going to come back very well. But so this Reuters poll, 28% of people say that they are regularly using Chat GPT at work. 22% said the employers are allowing this explicitly, where the work has said, yes, you can do this. Tinder, Samsung, P&G are using Chat GPT for work despite being banned by the employer. Not good. Now, when I first read that, I thought, what could you possibly be using Chat GPT for on Tinder? But Tinder employees are using it for harmless tasks like emails and research. Don't know what they're researching. Samsung banned it after someone accidentally uploaded sensitive details, sensitive code. Okay? You know, you can ask Chat GPT to do all sorts of things. Hi, see this piece of code? I don't know why it won't do what I want. Can you fix it? And they fix it, or try to fix it. Coca-Cola and Tate & Lyle, Tate & Lyle's an advertising company, are trialing approved internal uses. So that should be interesting. I think that as long as you're not uploading personally identifiable information, it's a maybe. So employer policies, going back to the Reuters article, 10% of respondents reported that the boss explicitly banned external AI tools. 25% don't know the company policy. Microsoft and Google are cautioning it, but haven't banned it. Well, Microsoft is coming out with Copilot. They better not ban it. P&G, the hard goods company, employees report being unable to access it on the office network. Do you think your employer is blocking it? Policies range anywhere from bans and trials to no official guidance. We are going to have I don't know what it's going to be yet. We are going to have an official guidance here this year, both companies, for the tax office and for Tax Practice Pro. Right now, though, we don't have an official guidance, hence why I told you I did a couple of slides, including this one. that I had Chat GPT give me, not Chat GPT, I had Llama, I think, give me the slides for that one. So human reviewers, here's the problem. There's data privacy and security risks here. Human reviewers can access the conversations and the reproduced data. So in other words, you agree in the end user license agreement, whatever I type into these free and low cost versions, somebody else that doesn't like the answer or wants to see what the answer is going to be able to review what my inputs were. Ben King is vice president of customer trust at TIGTA, and he's quoted in the article as saying, people don't understand how the data is used with generative AI services. In many cases, it's used to train or teach or improve the results. And you've agreed to this. Now, a so-called malicious prompt could coerce Chat GPT into disclosing sensitive training data. I feel like I'm in an Isaac Asimov novel, right? Where I need to know how to speak to the robot so as not to freeze its brain. Same thing here. The open-ended nature can make it hard to control your data once you let it out and put it in there. Careful policies rather than a blanket ban is probably needed, according to cybersecurity experts, and these risks require careful policies rather than blanket bans. I'm really hoping that we are going to hear from Knox this fall when he does the cybersecurity update for us on what his thinking is on both the use and application within the cybersecurity framework of the tax and accounting industry. Interesting articles on Social Security. Retirees face $17,400 cut in benefits beginning in retirement years of 2033. So there's a reduction in benefits starting in 2033. They're going to run out of money. Payroll taxes currently aren't enough to cover the monthly payments to retirees. So there's a good government group called Committee for a Responsible Federal Budget, and they took a look and said that a typical newly retired dual income couple in 2033 could see a $17,400 drop, $1,450 a month. Higher income folks could see as high as $23,000. Lower income folks could see as low as $10,600 decrease in benefits. That's still a lot of money. All right, so they came out with some updated projections on when the Social Security Trust Fund is going to run out of money. Now, my understanding is there's really no trust fund. It all goes into the general fund, and money in on one line, money out on the other line by the federal government. And the last number I saw was that we were taking in $80 billion more in Social Security taxes than we had paid out. So Social Security does operate on a pay-as-you-go system. They're unable to borrow money into the Social Security system. The trust fund is expected to be depleted in 2033. I think that's the year, since there's no trust fund, that we reverse. More money is going to go out of the federal budget from Social Security obligations than will come into the Social Security, come in on that line item of income. Fewer workers are supporting a growing retiree population. That and all these S-corps with no payroll. Trust me. The Disability Trust Fund reserves are projected to be solvent for 75 more years at least. Total annual cost of the Social Security program will exceed the annual income in 2023 and throughout the projection period. The Social Security trustees recommend legislative action to address projected trust fund shortfalls. And the last time anyone did anything was 1983. If you remember, among other things, in 1983, federal employees previously had been on federal retirement and not Social Security participants. They all got moved into Social Security after 1982. So part of the problem, not really the problem, but we had a huge jump this year in the cost of living. The inflation has a two-edged sword, right? So we had an 8-point-something% increase, approaching 10%. And what happens if we don't change Social Security? Well, we're going to have to reduce the benefits because we only have a finite amount of money. Single person, lower income could see a $7,900 decrease. Married couple, higher income can see a $23,000 decrease in benefits if the federal government does not take some sort of action. Over the last 30 years, we've seen the wage base slowly increase from $50,000 in 1990 to $160,000 in 2023. I think that's the numbers, 160. We went 147 last year, 160 this year. So some of the things in the trustees report: total income, including interest, was still $1 trillion in 2022. Not bad for a program that's about to go broke, but they're going to expend a little bit more, right? They've got $1,222 billion, but they're going to spend $1,244 billion. So that's about as close to break even as you can get. 66 million beneficiaries. Actuarial deficit over the 75-year period is actually 3.61% of taxed payroll. And then there's administrative costs of about 0.5% of the expenditures. So very, very efficiently run organization. So if some of this comes to light and your clients are talking to you, I thought I would give you, everyone wants to be a planner, right? Give me a big fat fee, I'm going to hand you a tax plan. Well, going back to what AJ Reynolds does, tax planning for the moderate income client, Social Security benefits could cut by up to 27% in 10 years from now. So what can people do? They can consider delaying benefits until full retirement age. Right now, you can take retirement at 62. Maybe you wait till, depending on your age, 66 or 67, right? We're phasing in 67. And you'll get a higher monthly payment by taking your full benefit at the full retirement age. Each year of delay in between your early retirement, full retirement at age 70, increases benefits by 8%. Using retirement savings as a financial bridge can be beneficial and allow you to build up the Social Security benefit. And of course, there's all sorts of other considerations other than just how much I'm going to get paid. There are other strategies for couples. Surviving spouse receives the higher of the two benefits, but not both benefits. Lower income spouse can claim benefits at full retirement age, and the partner can defer until the age of 70 to compound the higher benefit even higher. Older spouse can start taking benefits at age 70, which would provide higher benefits for the younger spouse at their death. Again, by deferring, a lot of strategies here. And Social Security provides inflation-adjusted income. We know that. So this week, TIGTA is the Treasury Inspector General for Tax Administration. This gentleman is J. Russell George. He has been the commissioner of TIGTA for as long as I can remember. So he had a number of things come out, 3 this week that were worth discussing with tax professionals. So their Security Modernization Act evaluation, sensitive business and individual tax account information can't be found. They stored some microfilms and they can't find them. And they've been locking the wrong accounts when someone passes away. So we will share all of this with you shortly. Ellie Jones did much of the summarizing of these for me. So I really appreciate that Ellie is helping me with this. So TIGTA does a Security Modernization Act evaluation. So the IRS had to implement the Federal Information Security Modernization Act of 2014. There's a number of years they had to implement these changes. The purpose of FISMA was to improve oversight of federal information security programs and identify security weaknesses within the systems. TIGTA found the IRS cybersecurity framework was not effective in 3 areas and only effective in 2 areas. Not so good, right? Weak areas included poor inventory tracking system. Now, what do they mean? They don't mean inventory, we sell widgets. They mean work coming in, right? A notice goes out, I send in a response. I file a tax return, I file an election. We've known this prior to the pandemic. They had trouble with 2553s and mostly paper documents, right? That's always been their downfall. Hardware and software is not up to date. Well, in all fairness, they've been underfunded for 20 years. What do you expect? That's the whole purpose of the $80 billion granted under the Inflation Reduction Act. Mediation and patching of detected errors in the software isn't happening on time. Your Microsoft wants to update your computer at least on Tuesdays. They're either overriding it, not scheduling it. Large organizations, to manage the data load, different computers get updated on different days. So the failure to implement multi-factor authentication consistently across all of its systems and all of its users. That's a biggie. I don't know about you. I had to sign a document this year that I promised to use multi-factor authentication to protect any data that's at rest on the internet. Apparently, that doesn't apply to the IRS. IRS admits, remember that in a TIGTA audit, at the end, TIGTA says, here are the big takeaways, and the IRS management gets to admit, deny, make a statement, and then if there is a statement, then TIGTA gets the last word here. So the IRS has admitted it has gaps in its system monitoring and that not all third parties working in it have renewed their interconnection systems agreement. In other words, they didn't sign the document. They're not following our rules. IRS is going to identify these errors and adjust them. IRS has the policies in place, but does not consistently enforce them. That's a problem. That's like, I have the ability to turn off virus protection on my software. I did the right thing. I bought the software. I put it out there. Yeah, I need to get my work done. Click off. They're not enforcing these things to make sure they're getting done. Again, they're going to address it in manager meetings. Well, does that go over their head? Does it get done? They want to do a skills assessment in the fourth quarter to review employee skills and determine what training needs to be done for security competencies. You could just send them the old test, send them an email and say, hey, I need a copy of those W-2s. Would you send them over, please? And see how many people answer that question. So the second audit that TIGTA released this week that's of interest to tax professionals has to do with deceased taxpayer filings. So as you know, for identity theft purposes, as soon as the Social Security death index is updated that someone has passed away, the IRS locks down that account, mostly because they don't want identity theft, someone using a Social Security number that nobody's using it right now, and maybe we can use it until everybody catches on the person is deceased. So when someone dies, SSA locks the number, Social Security Death Index. IRS gets this data every week and updates their database. TIGTA found 77,868 taxpayers with erroneous deceased account locks when they looked at the master file. Now, granted, you're coming out of COVID on January 1st, 2022, but TIGTA is taking a random sample, right? They're auditors, and they're looking at their random sample. And when it comes up with that kind of number on the random sample, man, SSA did not have these people deceased. IRS identified that 20,000 of them were locked in error. TIGTA found 14,000 more that were locked in error. Yeah, don't challenge us, right? And then IRS confirmed another 6,800 returns in their system couldn't be processed due to erroneous account locks. Just what are you going to do here? TIGTA recommended that they work with the IRS to review the 77,000 locked files. They should be done by 2032. The 20,000 number is their answer to which are incorrectly locked. The IRS is arguing 57,000 are appropriately locked, but why doesn't Social Security know that these folks are deceased? Other reasons for a lock include a taxpayer not having filed in 5 or more years, or there are no information returns in their Social Security number. TIGTA is recommending that Wage and Income Division review the accounts. The IRS agreed to let them review the accounts. 14,000 accounts were locked due to a mix of employee and taxpayer error. IRS will review these accounts, meet with the stakeholders, and determine how to resolve them faster in the future. IRS receives an annual comprehensive file from the IRS from Social Security in June, which they could use to reconcile these things. They need to do a more thorough job of this. And then in January of 2023, TIGTA went back and found 4,852 more records that needed to be looked at. So in these cases, taxpayers receive a CP01H letter, notice, requires them to contact Social Security and say, not dead, me, not dead. If the lock, though, is on the IRS's end and Social Security's data is correct, that call to Social Security does not resolve the issue. Disconnect, right? So TIGTA is saying the IRS needs to update the letter so they can work with the IRS to resolve a deceased account lock issue. In other words, we agree it's wrong. Whose problem is it? Is there an ombudsman? IRS, of course, said we have enough work to do. If a taxpayer has plenty of options to reach out to the IRS once Social Security confirms the error is not on their end. TIGTA disagrees and believe this places an undue burden on the taxpayer. I don't disagree. I mean, what are you otherwise going to do? File an identity theft claim and say you guys got it wrong? Yeah, not terrific stuff. Okay, this is meant to be fun and not mean. So TIGTA microfilm was lost. IRS is required by law to back up and store all of their tax records. And the IRS uses microfilm cartridges because it's low cost, reliable, long term. And it's a physical item, right? I know where it is. It can't easily be copied or moved. So several processing centers store microfilm. TIGTA went and looked at Austin and Kansas City and also Ogden. They found the inventories were not being conducted. Hello, yet another thing the IRS is supposed to do. And as we're seeing, nobody's looking. So when nobody's looking, that slippery slope. We were too busy this year. We didn't do it. We'll do it next year. And then all of a sudden it isn't getting done. So in Ogden, microfilm was stored out in the open. Like they were on an open shelf that anybody could access. No security, no other type of monitoring. Kind of like these files here, right? IRS is required to send microfilm to the Federal Records Center. And they haven't, they've been busy. They haven't done it since 2018. Now they're saying they don't have a contract to transport it safely and securely, but that seems to be a little self-serving of a statement. And more importantly, I would think in the last 5 years, they could have put it out to bid and gotten a contract. IRS maintains poor inventory control with a microfilm, so it can't locate any of the 2010 microfilm sent from Fresno before it closed to Kansas City. So remember, we've been reorganizing and decreasing the number of campuses that process returns. So Fresno hasn't been processing tax returns in a while. And now I think Fresno either closed or it's an appeals site now completely. TIGTA recommends a full inventory of all the microfilm in the processing centers. IRS said they would get it done by tax due date. TIGTA recommended that Ogden move the data to a secure location with limited employee access. The IRS did not agree because on a campus, it is already controlled. That's interesting. So that means I don't need, I don't know that I don't need an antivirus on my software, on my computer. IRS is supposed to destroy microfilm that's 30 years or older. TIGTA saw microfilm back to 1989. IRS said they will find those cartridges and destroy them in the inventory they haven't been doing. IRS does not agree with TIGTA about proper microfilm storage rules, such as humidity access and acid-free boxes. So good for them. All right. So nothing huge here, but yet again, lawmakers challenge tax-exempt status of nonprofit hospitals. So to be fair, it's a bipartisan group. Elizabeth Warren, Chuck Grassley, Bill Cassidy, Raphael Warnock, Democrats and Republicans. And there's cases of hospitals charging full price for services to folks who should qualify for a free or a discounted service. And they've requested that there's an update, that they get updated on the hospital disclosure forms being used for charity care. These senators would also like to identify hospitals which have a revoked tax-exempt status or are at risk for noncompliance. Well, they can go online and look that up, but I get what they're looking to do here. So Commissioner Werfel was speaking unexpectedly at the IRS forums in DC. He was not the keynote speaker. And he mentioned that cutting funding is draining resources for taxpayer support. So we're back to politics, right? We gave them $80 billion and a nice of long-term money and a nice increase in the annual appropriation. We've taken away 20 of the $80 billion. We took away $1.4 billion of this year's appropriation. So now we're back to politics of money. What do you want me to do? Because you're cutting into what you gave me. There's a push among some lawmakers to cut budget appropriations further. So there's concerns about the impacts on the modernization and customer service that they're working on. Obviously, if you there are certain things that are mandated. I have to process your tax return. I have to issue a refund. I have to have servers up in e-services and computers for people. What do I not have to do? It's not mandated that I answer the phone in a timely basis. It's not mandated that I respond to customer service letters in a timely basis. I can tell you I need more time. I cannot answer the phone and give you a busy signal. We're headed back in that direction. So further appropriations might mean further appropriation cuts should mean cutting into the Inflation Reduction Act money, that remaining $60 billion, to fund current operations, which is not the intent. We already talked about this last week, but I thought I would mention the IRS has updated the ERTC guidance, and we looked at a number of things last week, including the supply chain disruption memo, the GLAM, that got issued by the IRS Chief Counsel. IRS announced this week they want to take a look at ESOPs. So the IRS has been unhappy with the use of different retirement plans to buy and run a business. And they're starting with ESOPs and employee stock ownership plans. So the IRS is warning there's some problems. So you ever notice how your IRA, you got a Form 5498 at the end of the year reporting the value of the assets? Well, a self-directed IRA or an ESOP are no different, and someone has to assign the value. Typically, the custodian doesn't. In some cases, they have to get an official valuation done. In other cases, like in mine, I just write down the value of what's in there. They're seeing some issues such as prohibited allocations to disqualified persons. So there's specific rules, just like other pension plans. It can't be top heavy. It can't favor the owners or the high income earning people. Loan requirements appear to not be being followed as a widespread issue. So they're thinking that this means there's possible abuses out there. They're looking at practices between S corps and ESOPs, right? The ESOP owns an S corp. So they're concerned about the diversion of taxable business income into an ESOP rather than to the business owner. So we're going to see audits of ESOPs going on. So they're doing education and outreach, increasing exams. Where they're finding income hiding schemes, they're going to address them. And they're going to respond to budget. Somehow they've got to respond to budget cuts impact on enforcement, because they may find that they don't have the money to do this despite wanting to do this. The IRS union has a new president. Tony Reardon is retiring, and Anand Mooney, who is a Customs and Border Protection officer, is now the president of their union. Doreen Greenwald is the president, and Mr. Mooney is going to be the new vice president. All right, so consolidated returns were a larger issue prior to the Tax Cut and Job Act. Consolidated return is when I have a corporate parent that owns various subsidiaries. The problem back then was that all of these related entities needed to split the graduated tax rate. So if you remember, prior to 2017, the first, for example, $50,000 of C Corp income was taxed at 15%, and the next piece was taxed at something else up to $250,000 when the 35% rate kicked in. So the big thing you did then is you filed a schedule and said, here's how I've split up the graduated tax rate, this entity, that entity. So IRS has not really been enforcing and writing rules that they need to do because it's a flat 21% tax rate. Nobody cares as much as they used to. So they've updated the regulations because we have new legislation coming out. So they removed regulations that no longer are applicable. They've eliminated anything that was antiquated or regressive in terms of the terminology. Remember, we're going to rewrite the code. We're changing pronouns and things. So they're working with the Treasury Department. They've got to write corporate alternative minimum tax regulations now, because if you remember, we now have that corporate minimum tax of 15%. So based on certain criteria, and it's going to be very interesting where they go with this. And they've withdrawn or partially withdrew some of the things that are in the rulemaking process that the rule never got finalized and we no longer need it. So good use of the government's time to pull those things out. So Revenue Procedure 2023-59 is out, and it lists the requirements for claiming the credit for a home energy audit. So there's a credit of 30% up to a credit amount of $150 for doing an audit of your home. And this has to include an estimate of the energy you're using and the cost savings for each recommended improvement. And then starting in 2024, a qualifying audit has to be done by a qualified Department of Energy certified auditor. I guess we're going to hear more about that. Maybe there'll be a standardized report we get. So I've never filed a private letter ruling because of the cost, but at the beginning of the, not really the beginning of the pandemic, but I think in early 2022, they created a test of a fast track program to see how it would work, how quickly we can get some of these things through. So issues that were related to tax-free and taxable acquisitions, so 386 reorganizations, and different divestiture transactions. We're going to spin off this company, and we're wondering if it's tax-free. We think it is. So those things and rulings on corporate loss limitations and consolidated returns can all be submitted through this fast-track process, and you get an answer much more quickly. I don't know how much of us that affects. So Liberty Tax has restructured. They filed bankruptcy last week, and they filed a Chapter 15 bankruptcy listing $284 million in debt. This doesn't include the franchise locations, but I noticed in the filing, the website says 2,500 plus locations. The filing actually says the number is more like 2,200 right now. They have an agreement in place with the lenders that they're going to get equity for the debt. And they appointed a gentleman named Scott Terrell as CEO, and he's running their debt burden reduction plan. He's running the show. Not clear if he's permanent or just to get them through the bankruptcy. So an interesting issue that we've talked about lately is the return to office orders, remote work. 72% of employees are under return to office mandates. Everyone here is under a return to office mandate. 20% of employers are recommending returning to the office. Now that differs that in 2021, only 56% anticipated any type of mandated return. Now we're at 72% is the actual number. So always that big pushback, flexibility and work-life balance. I guess that means when you're supposed to be working for me, you can go to your kids' parent-teacher conference or do your grocery shopping, right? Because, you got your work done and who's to know where you are. I put this in because this is fun. Taylor Swift tour revenue in LA. Now they had a 6-day tour. Raised $9 million in hotel taxes, $20 million in sales tax from all of these tourists and people coming in. Taylor and her management company are estimated to pay $17 million in income tax. I could not get a breakdown. Does that include the federal tax or is that just state and city tax? It must include the federal tax, but still huge. Estimates range as high as $5 billion of economic activity for her entire tour. Just amazing. Of course, she pays California income tax. There's income coming from resale tickets. Average resale ticket in Denver, $1,600. So something tells me that she should raise her own prices. She would keep the money herself. So we have more education and more regulation coming out of Washington. So U.S. Treasury is this falls squarely on our people. If any of you have small money transmitter businesses, U.S. Treasury Department is going to publish a guide for small business on reporting beneficial ownership information. Well, we know about that. That's the Corporate Transparency Act stuff. They want to set up a support center to assist small businesses. They've raised concerns, the Republicans, of course, about the lack of education in Congress. I mean, the lack of education on these forthcoming legal requirements. There's a lot of information out there. We know that. The CTA is supposed to combat abuse of legal entities by criminals and by getting everybody else in line. Somehow that's going to help. FinCEN is going to issue a small entity compliance guide. It's probably going to be a lot of our clients, and provide tools for businesses to comply with the Corporate Transparency Act. So we'll see what happens. So this guide is going to explain reporting requirements and be like an FAQ to provide answers to common key questions. The contact center is going to assist small business owners with how to fill out the BOI stuff. There's supposed to be insurance that sensitive information is going to be protected in a secure database. What did we just hear about the federal government and how they're handling their database? The government's looking for a robust outreach strategy to disseminate information widely. Financial institutions are going to need to prepare their employees to handle queries about the new rules. Yeah, I agree. This was good news for us. So the cyber insurance market seems to be softening up a little bit. So it's becoming more of a buyer's market after long increases. I mean, I had 40% increases year over year. We're paying about $3,000 a year for cyber liability right now. So, is this the time to go look for a better deal? Certainly at your renewal, maybe you should. Big thing, multi-factor authentication is essential. Underwriters are looking for this due to the extra layer of security. My experience is that most tax professional policies require this for data at rest on the internet. In my case, I signed a sworn statement that, we do this. So, of course, now people have sent me stuff on Facebook, so I had to lock down my Facebook account. It's so stupid. Managers are authorized to access corporate data and resources. Look at your endpoint security. Do you have any? Business continuity testing. What happens if something goes down? Are you sure that your backups work? If you're making your backups at all. And then simulated scenarios to test business continuity planning. My IT guy for 15 years has been recommending that once a year we take a backup and we try and do a cold install off the backup to make sure your data is backing up correctly, that it's there, and that it's usable. I had hoped to write you some more about this, and I didn't get a chance to, but Davis-Bacon Act revamped regulations are out, and they're going into public comment. So you have 60 days to reply on it. 812 pages they released. I wonder what's buried in there. I'll try and have more for you on that next week. So President Putin signed a decree suspending all of the double tax agreements of unfriendly countries to Russia. So withholding taxes are going to be applied to cross-border transactions and transfer pricing arrangements. But, so they're going to not honor anything they have in place. They're probably going to go to 30% withholding on everything. Now, this impacts any company that's still in the U.S., still in Russia, even after the U.S. and EU issued sanctions. Countries affected include the EU member states and Australia, Japan, South Korea, and the U.S. So a question came up with, does that mean that I can't take advantage of the treaty on my U.S. tax return if I still have something going on in Russia? And the answer is that I think we found that on. Nope, not here. What we found is that in paragraph 10, title 10, it said something about if one withdraws, everybody withdraws. So threat of double taxation may lead Russian businesses and investors to repatriate their assets out of the U.S. Foreign minister, his efforts to renegotiate this has halted. So it's heightening the Russian isolation from the rest of the world, or at least from the EU and the U.S. So we shall see. But we have some concerned practitioners who have posted online about what to do with their Russian clients doing business in the U.S. Thank you all for joining. Wait, don't leave me. I have something else for you. So we started something and we never really started doing it. Where is it? We were going to do the weekly bad tax advice. So no one's been sending it to me. So I found you some bad tax advice.
What's the top things that people won't even have a clue that they can write off?
Did you know you can write off your birthdays?
Get out of here.
Can I go into that?
Go ahead.
If you have a birthday coming up, instead of just throwing a party for your birthday, you can host a mastermind. You call your friends, you call Gil, you call all your business partner homies. Y'all spend the first couple hours of the party talking about business strategy, social media strategy. At this age, my friends be my business partners anyway. We gotta be breaking bread. The first half of your party is a mastermind. You invite your people, you take attendance, y'all go over social media strategy, you take notes, and then after that's over, then you have the party. But now you're able to write off the venue, the Airbnb that you hosted your birthday at. You're able to write off the food you get catered. You're able to write off some of the drinks, and you're able to write off all the expenses related to throwing that party. Yeah, we are calling that a business mastermind. And all you have to do is document it. You take photos, you take attendance of who came.
There's a lot of
talked
photos.
About what business topics were talked about, what podcast guests were secured, right? We do all that. So now we're focused on how to turn our personal birthday into a 100% tax deductible business mastermind.
I want him to do my taxes. I don't know about the rest of you. So if you see this great advice on TikTok, let me know and share it, and maybe I'll feature your bad advice here on social media this week. So everybody have a great weekend. We'll see you next week, hopefully with another supersized edition of our program. Everybody take care.